outside bars. That's the topic of this video. Before we get started here, hit subscribe down there, and that way you can be notified when these kind of videos get put up. Anyways, let's talk about the outside bar. Right? We also can call it the outside reversal. And essentially, it's just a one bar bullish or bearish pattern. And what it does is shows strong volatility in whatever instrument you're trading. Now, compare that to the inside bar, which is completely inside the previous bar. The outside bar is going to take out both the high and the low of the previous bar. And some traders will call this an engulfing candle. But really the important thing to understand is what the pattern really means. Now, this is a reversal pattern, okay? And what makes it powerful is not only did sellers sell lower in the case of a bullish outside bar, but the buyers were able to completely overtake the sellers and potentially trigger stops that were just above the high of that first candle. Now, this is a daily stock chart of BK. Now, price wasn't doing a whole lot for several days, okay? In the upper shadows, it shows that buyers would push price up, sellers would slam it back down. And after several days, price opens lower, right? We're at the large green candlestick here. There's some more downside, right? You can see that little lower shadow there. So originally, this candle would have been red. So that helps bring sellers in, okay? And it gives confidence to those that are already short. So in one day, buyers stepped in, and not only did they put shorts underwater during the session, they ended the day by taking the stops of those short when those potential resistance levels fail to show up, right? The high of each candle. And as stops fired during the day, price just keeps driving higher, and it brings in more buyers. And it's the same thing with you're looking at bearish outside bars. This is NEO, the crypto, plays pretty similar. People are long. That big green candle, momentum style candle, brings in more buyers. The next day, what does price do? It pokes up and then rips down to break the other side. And that just shows sellers are in control. And one day later, 12 days of gains are taken back. And those with stops in those textbook places, right below the lows in an uptrend, they're taken out. So can these change the trend? They can. But I'm more interested when they set up strong corrections and understand it's just simple price exploration, looking for sellers and buyers at different levels. But what happens after the outside bar shows up is really what matters. And just knowing these bars appear on charts, that can help your trading. And we're going to talk about that later. Now, on the time frame that you spot an outside bar, what really is forming on a lower time frame? A broadening formation, or the megaphone pattern. Okay, now this is a weekly and a daily chart of the stock Marvell Tech. Let's break this down. Okay, and number one, this is our outside bar. It took out the highs of the previous candle and reversed back down to take out the lows. And number two, this is the beginning of the next week, where the previous week had that outside bar. Price makes a lower low, filling in the gap. It begins to bounce off the support zone that was drawn off of the outside candle lows. And at number four, price stalls. It ranges at the resistance line that's drawn from the highs of the outside candle. Look back at the weekly chart there. So the overall trend direction is up. And the daily chart, when we're looking at the weekly context of an outside candle, gives you places to buy and either sell out at the top or just tighten your stops. So this should give you a better understanding of just how price plays out with an outside bar and how you can draw your support and your resistance lines off of them. Now, there are two main ways to trade an outside bar. You trade it as a reversal or as a continuation pattern. For a reversal pattern for a buy, we want to see an outside bar that closes to the downside. Okay, there are two main ways that we can trade this reversal. For the first pattern, we see the outside bar take out the high of the previous candle, and then it's going to rip right through, take out the lows. Okay, the higher time frame chart is an uptrend. And this chart has actually put in a higher low after a lower high. Okay, so that points to the potential of the uptrend resuming. So the next candle, we get an inside bar labeled IB. This is essentially compression of volatility. And as we talked about in a previous video, an inside bar is actually a triangle on the lower time frame. So we would place a buy stop order just above the high, the red circle there. Or if we're watching in real time, we just hit the buy button once price breaks that high. Now our stop loss, it's going to vary according to the trader. You could use the low of that inside candle. You can put the stop in the middle of the inside bar. You can use ATR. There's a lot of different ways you can do your stops. The profit targets, we want to target the previous high. Okay, in this case, it's the top of the outside bar. You can then trail your stop. You can pick other profit targets. It's entirely up to you. Okay, so I don't wait to find these outside setups at specific price points like support and resistance, because since my initial target's pretty close and the break of the inside bar shows upside momentum, the odds favor some gain. There's a secondary reversal. Now, we're not always going to get an inside bar, okay, to help us enter the trade, so we need another method. And that's just simply trading a break of the highs. So the outside bar opened down, buyer stepped in, stops were hit, selling took over, took out the other side of the past several days. So the key, this outside bar closed red. Now that sets up a potential reversal. The next day, price fails to break down, rips through the outside bar, taking out all the highs. And this led to over 7% gain before price decided to pause. What about a continuation trade? And I'll be honest with you, I trade reversals 99.9% of the time, but having a continuation approach, it's viable. The main difference is the outside bar being green for an uptrend or red for a downtrend. This is actually a 15-minute chart of the stock MCK. Now we're looking at a bigger picture uptrend. The outside bar takes out the low of the red candle, immediately reverses to the upside. Okay. The general play is to take the trade once the high of the outside bar is broken. If we're day trading, you might, once that outside bar has yet to form, it broke lows, reversed back to green, you took the entry projecting we are about to see an outside bar. Now the risk when you're taking an aggressive entry like this is price may go green and then stall and then reverse. And if that's the case, you're going to take an exit and a loss on that trade. Okay, so there's a trade-off. To wrap it up, trading price action and price action traders, I think, will love the simplicity of this approach. And it does take into account how traders really behave, right? Price breaks down, seller steps in. They place stops above the highs. Price reverses, takes their stops. That can power the trade further in your direction. Many traders like to catch the turn, right? The trend change. This will capitalize on the trend being your friend. Now, profit taking, it's going to be unique to every single trader. Some will go for exits at highs, some will set targets, some will trail. It depends on what kind of trader you are. We need stop losses. Okay, they can also be mental stops, but you got to know where you're going to exit if the trade goes south. And a simple approach is just use the low of the previous candle or the midpoint of that candle, because once it starts to go wrong, you want out. And like I always say, you got to map out a trading plan. You have to map out your risk protocols. You got to follow it on every single trade that you take. I appreciate you taking some time out of your day to watch this video. Hit like. If you have any comments or questions, you can put them down there in the section below, the comment section. And as always, I'll respond. Thanks for watching.